ARK raises Tesla's stock price to a $6,000 price target is our primary view today, and we take a look at other impactors to Tesla's stock. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters as well as our subscribers. If you enjoy the show, please take time to like and subscribe. So our focus topic today is the fact that on the 14th of January 2020, the CEO of a company called ARK Capital came in with a $6,000 price target for Tesla. So we were obviously impressed by the new number. She previously had a $4,000 price target on Tesla. So our sense was that that number was pretty impressive given that the stock is currently at $530 per share, or $540. And so we wanted to sort of go through her logic. I would say that this is an unusual show for us because usually I'm really excited, committed to the conclusion that's been shared by, if you will, the executives in question. And so in this case, I think that her logic is sound, and I can't say I agree immediately, but I think the future will have me agreeing with her. So let's first maybe go through the facts, and then I'll do my interpretation or try to keep myself out of interpreting what she's saying based on my view of things. So first, she describes the fact that previously she had a $4,000 price target at Tesla in 5 years. She's actually shifted that to a $6,000 price target, and that's unusual, and one of the main reasons we're going to cover that today. The second thing that she pointed out is that sort of there are building blocks to how she gets to 6,000. The first is that she's arguing based on difficulties of giant OEMs competing that Tesla is going to be able to maintain its 80% market share around the globe in the key segment it operates, because clearly there's a technology advantage with Tesla, but she believes that the advantage will be maintained for a longer period of time than most people expected. And there's plenty of data to support that. As you know, the closest sort of real competitor right now seems to be VW Audi, and the Taycan at 200 miles combined with the e-tron at 200 miles are definitely sort of vehicles that represent, they represent competition, but not serious competition for Tesla. I wanted to, so her starting argument is just huge market share that they currently have and huge market share that they maintain. The second argument she makes is that, and sort of the biggest of this, is that there's something going on that I call the trend process. And what is the trend process? It means that if one analyst says something, both investors and the marketplace will say, yeah, that kind of makes sense. But once you have 2 or 3 entities all say, oh, guess what? The logic that this person is sharing is sound. The fact that you have more people saying the same thing results in a lot of different entities starting to say, oh, this should be taken, first noted, and then taken into serious consideration in terms of how you're investing. So in this case, what we're suggesting then is that we had the Oppenheimer upgrader, if you will, Colin Roust. He discussed the whole issue of robotaxis. We have Bob Lutz discussing the issue of robotaxis changing the whole world. And we now have ARK CEO entering that realm as well. So what is, I have to admit, I kind of feel not so smart sometimes, and this is one of them because part of your job sometimes is to report the news and don't say anything until you get your opinion time. So I keep wanting to jump ahead to my opinion versus reporting the news. So forgive me if you hear the issues that I'm having. So basically, what the future looks like, according to a large number of people, is that Tesla's vehicles are already set up for robotaxi activities. So what that means is that, let's say you're in the city and you want what would be an Uber now, but a Tesla later is you want to go someplace. Well, you'll dial up your Tesla vehicle, a robotaxi pulls up in front, you get in, it drives you, drops you off, and then you're done. So that is the sort of future that Elon has been setting up for, and so all the Tesla vehicles are currently equipped for that. As you know, the regulators have not been going with full autonomy, and so this has not been allowed to occur fully yet, but pretty much between software and hardware setups, Tesla's preparing for this, and is going to be readily available to it. So what the ARC CEO was pointing out is that among the key components here is that once Tesla is allowed to do that business, the margins there will be 80%. And if they maintain their market share they currently have, they're going to be a huge player in that space. So this is sort of a thanks for giving me a hard time about the tie there, Jonathan. I'm trying, man. I'm trying. So what's interesting about this is that you have an interesting situation because there's something I call a bifurcated market. And what that means is that hedge funds and kind of investors, et cetera, have a interesting circumstance because there's an attitude that institutional investors have where they think over, they kind of look at the short numbers, but I have notes here, and I call it the 30% rule. So 30% is kind of what's the company doing now, how is it doing, is there any major management issues that we should consider, et cetera. So that's about 30%. 30% is medium term, how's the company doing, how are things looking? And then there's a 30% that is sort of long-term focus. So long-term meaning perhaps 3 years or greater, how do things look on that horizon? Because that's usually how value investors are looking at things. And so what we found interesting about this is that basically you have a circumstance where usually sort of at earnings is kind of when you see big moves in the stock price, and that's driven by what do the hedge funds think immediately, and they need to move quickly, and then what do the large institutions think, and they tend to follow on with what they think in terms of you're seeing the movement of the stock price. In this case, it's a very sort of weird, interesting situation because sort of the opposite of what should be happening is occurring. So when we're talking about robotaxis influencing the value of the stock now, and the impact of that stuff is 4 or 5 years off, it's very strange to have large institutions start rethinking their investment in Tesla along the lines of how those vehicles are in an underpinning of value component of who Tesla is, especially because it's not generating revenue right now along those lines is one reason why you could argue against it. And so kind of, if you look at the fact that she's arguing that Tesla is now worth $6,000 per share in 5 years rather than $4,000, what she's kind of saying is that about a third of the value of Tesla is now moving over into this new business that kind of doesn't really exist yet. So if you look at Tesla's stock price, in theory, let's say that robotaxi business to an institutional investor is worth between $150 and $200 a share. And the way I'm getting to that number is if she had 4,000 previously as a value, now she has 6,000, and the 6,000 or extra 2,000 or 1/3 increase in value of the stock is driven by this long-term sense of how these taxis hit. That's how we're getting to that number. Now, what's really interesting is that at this point, I guess we have 3 major analysts involved in this long-term sense of where Tesla's headed. So what we're going to look for, and I'd encourage you to look for as well, as we get more analysts going down this road of Tesla retaining its large market share, of the future moving heavily towards where Tesla is located, you could see increasing value of stock without necessarily other big news occurring, because you have these institutions that have to reevaluate how they're valuing Tesla short and long term and then bake that into their numbers. And so this can result in huge movements in the stock price, driven by the committees that have to meet and review this within those large institutions. And then once they say, hey, this is legit, you now have these guys able to, what I call, establish a new floor to Tesla's stock price. So as we've discussed previously, we definitely operate by the 3-day analyst rule, which is, as this stuff comes out, you're going to have some changes over time where sort of those analysts' sensation of what's going on are baked into the models that are built by the large institutions. And then you have this symbiotic relationship. Analyst predicts it, institutions embrace the logic, they rerun their models to determine what they should be paying for the stock price. So I'm kind of bringing all this up because what I'm trying to get to is the fact that you could say 534 for Tesla stock price is kind of the high side of where it's been, and it is for the last couple of months. But as this new logic starts to get baked into the stock, do not be surprised if Tesla ends up with a floor around 500, just above or just below, but a ceiling of, right now, what they're willing to put out there is about $700 a share. So I'm kind of shocked by this because 2 days ago, everybody was like, hey, or 2 business days, everybody was like, hey, can Tesla make it to 500? And let's see it happen. And now it's amazing to move into the zone of, wait a second, instead of getting to 500, what if the basement of Tesla's 500? So the overall suggestion that we're making here that sort of showed up with the robotaxi discussion is that we're in a situation now where, call it $200 worth of Tesla's value becomes what the robotaxis can do, and this is to the institutions. And then the rest of the car business is is the movement that you'll see in value. So in theory, you end up with this sort of zone of Tesla's in a great situation is the overall evaluation of this. And I was deliberate in giving you guys how I got the logic that I just shared with you. So don't flame me on the after questions, because there's a logic to it and it's not totally crazy. So bottom line is we're looking forward to how the institutions react to this news, particularly as they get other analysts buying into the logic that was shared by our capital and then followed up by Oppenheimer's Mr. Roust. My review of this whole thing is that I have 2 points, and I wanted to get to them. It's like the dessert. I wanted to get to them before the meal, because then you'd understand my logic in this process. So number one, there's a problem right now with all Teslas, and I wanted to encourage you to recognize that if you own a Tesla and you're driving one, and that is that Teslas can't figure out whether, if you're in autopilot mode and you're driving down the road, the vehicle perceives a truck crossing the road as actually a bridge. So it's confident it can go under that bridge. And so that's why you keep seeing all these accidents where, pretty much at high speed, people are running into trucks and dying. And so if there's any cross traffic to your area and you're in autopilot, I wanted to encourage you to be mindful of this. So that's one example of challenges that the vehicle currently has, which will be solved over time. But I think it's one of the illustrations of why they're not allowed to go full autonomous yet. The second thing that comes up in our mind is that the battle between LiDAR and radar. So what's happening is there's a concept called LiDAR, and if you look at all the Google vehicles moving around, they kind of have a Kentucky Fried bucket on top, and then they have something spinning there that actually sees it's a laser, and it's throwing out pointers to determine what's around it. So Google is really focused on that. They're doing a lot of testing with that vehicle in Arizona, where not a lot of smoke, not a lot of fog, not a lot of traffic. You can test these out. The cost of a LiDAR system, I believe, is about $8,000 to put that on a car. Tesla has chosen to go for radar slash sonar. So that system that Tesla has on the car is, again, in that $8,000 range and declining in price. So it turns out that each type has its optimized what it can and can't see. And so you have this kind of interesting situation where the vehicles are, what I'm looking forward to, hoping for, is we end up with a combo where prices fall enough where vehicles can have both of these. And that way you have a backup method for making sure the decision the car makes is going to allow it to be a good one, and it's not going to cost anybody their lives. So in essence, what I was arguing is that I like the idea of the robotaxis being big later. The challenge is that, it doesn't work currently in the manner I just described, and we already know that, and that's why it's not being approved. But can and will it work in the future? I think it will work. I just think it'll take a few years, and I'm impressed, amazed that they're willing to bake that into the stock price now, and it's so far away. So I guess kudos to those who would go about it in that fashion. And I've been forthright in terms of, I think it makes sense, but I'd rather see the money and know that it's going to work before I pay for it in the stock. And so I have to admit, I'm a little bit of a skeptic, but I can say I understand their argument and I can articulate it, even if I don't agree. So the other sort of note that comes up is that I wanted to review the fact with you that Bob Lutz made a comment that really blew me away, that sort of supported Tesla. And what he said was, in the future, what you're going to have happen is when you order the car on the robotaxi basis that comes to visit you, that vehicle could be high, medium, or low in value, and therefore the cost of the ride is adjusted. And so what he was suggesting is the number of vehicle manufacturers would decline as people would just be, there wouldn't be an attachment to necessarily the vehicle they were riding in. They would simply be ordering what was available and not worry about it unless it was just high line or low line, or more space than less in terms of an SUV size, or just space for one or two people. So that whole world is a world where all the branding and build up to cars that we currently see would really shift, and it would really shift to the competitive advantage of Tesla. One other area that I kind of disagree with, and we'll see how this all plays out, is Colin Roust, in his talk on December 18th on CNBC, was discussing the fact that Tesla has a great situation because they have 600,000 vehicles now moving around the world, and all that data that's being collected is being pumped in, and so they have those resources. I really think that a few things about that. Number one, I believe that what's going to happen in the future is, to make these things safe, the government is going to allow there to be sensors on every light pole possible. And now every manufacturer can leverage that data in order to manage how and where their cars move so that you don't get people killed. The second thing that's happening is that Rust is really impressed by the 600,000 vehicles, but 90% of the market is controlled by Mobileye. So out of the 100 million vehicles a year, it's possible 50 million of them have Mobileye built in. And so I'm just fascinated by the fact here that we're in a situation where you have, this phenomenon where you kind of feel like Tesla's ahead because they control and have direct data directly. But you have a pooling effect where all of those cars with these cameras on them for other manufacturers are collecting way more data. And even on a real-time basis, they have more data if you wanted to go for weather from the cars to be loaded up onto, what is being made available to news organizations, or loaded up onto Google Maps so you could see what road conditions are. So I just think that there's an interesting phenomenon here where, yeah, Tesla's collecting a lot of data, but their cars are only a fraction, under a 1% of the global market. And there are others that have, I think, way better volume of data to work off of as you make these decisions. So long-winded statement to say, number one, based on institutions now rolling into this conversation, I think there's justification for why Tesla stock price is where it's at. And then because we have that base of robotaxis, we were looking for then for the value of the company price-wise to go up, I think is there. As we've discussed, there are other things lurking in the background. Will Tesla enter S&P? That's another probably 10, maybe 20% increase in the value of the stock from here. But that's 6 months away. That's why we predicted a $1,000 stock price in June. We, there are other variables. Model Y's start in China, another big boost. I had a thought in China. The Model Y was announced by Tesla, but there are no Ys being tested there, and he had to show a picture of it versus the actual car, which I thought was interesting. The only thing that we could come up with on that one is that by making that move, Tesla in China is doing what I call the freeze move, which is as soon as Tesla is announced and you know the vehicle they're going to deliver, you have this problem where all these other competitors, their market share potential drops by 20 or 25% because there are a number of other SUV producers in China. But if they're having to go head-to-head with Tesla, they now have the problem of people choosing to configure their Model Y and wait 3 to 6 months rather than buying competitors' lesser SUV for comparable price point now. So it's a very interesting sort of what is Tesla doing and why. And the why, I believe, as Tesla said, is going to be greater sales than all the other vehicles combined. I agree with that. And so one wonders, why delay it? Let's get this thing rolling and let's get those cars out there to consumers so that you can take all that market share that goes with it. So we'll see how this plays out and obviously keep you updated to our knowledge base. So the stock price is where it is today. It's a good number, 530. Not bad for 100% or so return in a month. Any stock would love to have those kind of ROI. Any rate, we're at the point of the show, love to get your quizzes or questions. And thank you for the comment about my tie. We're trying to always do show improvements. But this thing is killing me because the neck size does not fit, but I can last for 20 minutes doing it. Wanted to mention that on our health front, we're actually encouraging you to check out the New York Times 1 week sugar challenge. And, it's a big deal. I like sugar. It's really good. It tastes great, but obviously there are health consequences. And we like to introduce ideas that might help you be healthier. Thanks for the Thai comment. 3rd time, Jonathan. I appreciate it. The next thing that I'd like to mention is don't go to bed within 2 hours of eating, preferably 4 to let the food digest. Number 3 is try out there's a 5-2 diet, but there are a number of fasting diets out there as a way to improve mental health at the same time as you're improving physical health. Also, wanted to encourage you to do the 25 leg lifts a day. Might be a good idea as well. There was just a mention by one of our viewers that Tesla is running about a 15% annualized return as of June. Obviously, great numbers. I think that there's some things happening right now for Tesla over the next few months that are going to be bombshells. The biggest one we're looking forward to is that once truck goes into production, I think that's going to be huge, and it's going to be interesting to see not only going into production in light volumes like they talked about, but in very large ones. Any rate, Karsten was talking about 816 on the fasting front. Again, any of them sound good. We've got a lot of research to support it being mentally healthy and otherwise healthy to get into that zone. So what we're expecting now from Tesla is, again, earnings are February 18th. We'll know a lot more starting a week before, week and a half before. We're going to see the stock sort of rolling towards what that is. The biggest surprise we're seeing is the number of analysts that are now coming out one after another to support the viability of Tesla in its current situation and long term. And so, I guess what we're seeing now is stabilizing in this range of price. And then, the earnings numbers and other announcements from Tesla as the start of Y production really driving everything from there. Martin just asked about January 29th being the earnings day. We saw online a February 18th day, which sounded really weird because it's so far out. And I wanted to encourage you guys to dig for data because obviously that's a huge circumstance, and the 29th is 2 weeks away. Starting Monday, which would be like the 20th, you'll really start seeing pressure on the stock with people lining up to be ahead of that. We're going to do some more research. We had some printed matter that said it was February 18th. I think last year was like early February as well, but we'll go ahead and dig for this because the date of that announcement is important. But what you'll notice is, based on the three components of options, the delta on the stock starts going really high starting a week before earnings are announced. And Tesla already has a high delta because it's been moving around so much. So at any rate, as usual, wanted to thank you for joining us today. As you could see, I didn't have my harmonica out, but we did have this handy. Indeed, yeah. Slowing sales. There's a comment regarding slowing sales of ICE vehicles being impacted by the arrival of the Model Ys, coming quickly. So yes, I think that's definitely the case. At any rate, wanted to thank all of you for joining us, and if I'm wearing a tie, you've got to wear one too. So we need to be even here. This is Greg for Teslafaninsight. Thanks once again for joining us. We're going to finally get our letters out to folks regarding SpaceX shares and the trip. At this point, we're looking like an April and an early June trip is kind of what we're planning right now. It may still be May, but it's really driven by where people end up. And if you're interested, please send us a Facebook private note with your email address, and we'll send you a note on what's going on with that. One last thing that we're trying to figure out is that, so we've been blessed to have a good channel that's growing and some really great folks on here. We're kind of playing around with the idea of a paywall, not a real high one, maybe $3 to $5 a month. And the logic of it is that it takes a lot of energy to do research and deliver a show. And one of the horrible parts of this is you have all these trolls that show up with craziness. And so, it's an interesting challenge because you want to do a good job, but then you have all this energy being drawn by craziness. So the idea behind a paywall is people are paying to be there, then you're paying to go crazy versus going crazy on me for free. So wanted to make it a survey item. We wanted to get your opinion on with a paywall, not too high one, but enough that if you're choosing to make that happen. And so the goal would be maybe put half to 2/3 of our shows behind the paywall. And then, and so you would be able to intake the show, maybe 20 to 30% of it, but most of it would be behind that paywall. So we definitely wanted to get your opinion on that. Obviously, if you're a Patreon support, you're already behind the paywall, so that's not a big deal for you guys, but something we're thinking about and would love to get your opinion on. At any rate, wanted to thank all of you for taking time out to join us. This is Greg for Teslafaninsight. Tschüss, mach's gut, German, au revoir, French, lehitrot, Hebrew, choda hafez, Farsi, Zdravstvuyte, Russian, hello, ni hao ma, Chinese, hello, Dobry den, hedge do. And then in Jamaica, we say, enough respect, walk good, Uh, Walk good, man. We do block the crazies, but like I said, it is nice to salute in Italian. It is nice to have a community that you're working with. Everybody's pulling for the same thing, which is to learn more and execute better, versus having a crazy back end there that sucks up time but it doesn't have much yield. Any rate, have a great day. Thanks again, and look forward to our next conversation. Bye for now.